The global markets may appear stable on the surface, but beneath that calm, there are signs of a deeper strain that are rapidly building up, from oil and gas to fertilizers and logistics. Multiple critical supply chains are coming under some simultaneous pressure. And coming days could, of course, prove to be decisive as markets are edging closer to a potential inflection point. Take a look at the next report for more.
Global markets are entering a more fragile phase, moving beyond isolated disruption into early-stage system strain. On the surface, key indicators still suggest a functioning system. Oil prices remain elevated but stable, LNG markets are tightening within a range, and policymakers continue to signal control. But beneath this, the confidence in supply reliability is eroding. Physical flows have not fully recovered, and even where commodities are moving, they are increasingly viewed as uncertain. This distinction is critical. Markets are beginning to shift from optimizing trades to securing access. At the same time, a widening gap is emerging between paper markets and physical reality. Benchmarks continue to reflect sentiment and liquidity, while actual cargo availability is tightening. This divergence is often an early signal of deeper dislocation ahead. The current stress is not limited to energy alone. 5 interconnected chains: oil and gas, naphtha, fertilizer, helium, and logistics are now moving in tandem, amplifying systematic risk. Energy remains the entry point, with supply uncertainty feeding directly into downstream sectors. Naphtha markets are showing early signs of strain, with petrochemical margins compressing and operating rates adjusting. Fertilizer risks are building more quietly as gas-linked production economics weaken. This sets the stage for potential food inflation in the months ahead. Helium, a critical input for healthcare and advanced manufacturing, is also tightening due to disruption in gas processing. Meanwhile, logistics has emerged as a central constraint. Rising war risk premiums, behavioral shifts among ship owners, and reduced effective capacity are limiting deliverability. The result is a system losing flexibility. This shift is already reshaping global dynamics. Europe remains highly exposed due to its dependence on LNG and sensitivity to industrial inputs, while Asia is moving aggressively to secure supply. This raises the risk of demand destruction in emerging markets. North Africa, meanwhile, is being drawn into the stress from both the supply and demand sides. Policy responses, however, remain focused on traditional tools such as price management and strategic reserves. These measures may provide short-term relief for oil, but they do little to address broader constraints. The next 2 days and weeks will be critical as buffers erode markets' risk, shifting from a price-driven system to one defined by access. In such a scenario, availability and not cost will determine outcomes. This is Bureau Report. WION World is One.